Okay, so let's start with the concepts of security analysis and portfolio management. Now, security analysis and portfolio management, in short, termed as SAPM, one must start with the concept of savings and investment. Now, that is very important. The concept of savings. Now, there has been a very famous saying that money saved is money earned. So, savings is very important as per the view of investment, because the money saved can be invested to get a decent return, because investment is the process of allocating money, right? It's a process of allocating money in prospect of getting a decent return. So the investment process is very important, as well as the objectives of investment. So when you start with the subject of security analysis and portfolio management, one should always start with the introductory part, that is the concept of savings and investment. After that comes the SEBI, Securities Exchange Board of India, RBI, DCA, Reserve Bank of India, Department of Company Affairs or Ministry of Company Affairs, then Investor Protection Cell and Board of Financial Supervision. So these are the most important regulatory authorities, right, governing the whole financial sector. SEBI, Securities Exchange Board of India, the primary objective is to regulate the whole securities market. It also is very important for the development of securities market. Ultimately, one of the main objective is to protect the investors, to protect the interests of the investors who are investing in the securities market. So SEBI, Reserve Bank of India, the primary function is to regulate the whole banking sector, right? RBI is that institution which is responsible for regulating the flow of money, the liquidity in the financial sector by increasing or decreasing the interest rates, the repo rates and the reverse repo rates. So RBI, Reserve Bank of India, the apex bank of India, established in 1935. Department of Company Affairs or Ministry of Company Affairs, very important for regulating the works of various companies and to protect all the fraudulent activities which are prevailing in some of the companies. IPC, Investor Protection Cell, which addresses the grievances of the investors who are having troubles or facing some issues in the financial sector or in the stock market. Board of Financial Supervision, which is responsible for the supervision of financial institutions and non-banking financial companies. So all in all, these regulatory authorities are very important. Then comes the next thing, that is theory and practical on risk and return. Theory and practical on risk and return. Now the theoretical part is also very important, because the risk is basically bifurcated into two: systematic risk and unsystematic risk. So one should also go through both these aspects of risk. Systematic risk is comprising of the market risk, interest rate risk or inflation risk, while the unsystematic risk is business risk, right, which can be diversified with the help of portfolio. So risk and return, the theoretical part is important, and so are the practicals. So you have done tremendous practicals on risk and return in the previous lectures, but today the onus is on just highlighting the various theoretical aspects of securities analysis and portfolio management. Next comes the important models called SAPM, APT, CML, Sharp Index Model, and Markowitz theory. Now their theory is important as well as their practicals are important. Capital asset pricing model developed by William Sharpe. Now this is again one of the most important and promising models of SAPM. The primary objective is to calculate the return of a security or the return of the portfolio by making use of this formula, which is RF plus beta RM minus RF, where R stands for R stands for return of a security or return of a portfolio. RF stands for risk-free rate of return. Now risk-free rate of return is that return which has got iota, negligible, or in fact zero level of risk involved in it. And the return on government securities like treasury bills, T-bills, is considered as one of the best example of risk-free rate of return, where there is no risk at all involved. If you are investing in a proposition, in a risky proposition like market, there is a certain amount of risk involved, when you are investing your money in share market. But RF stands for risk-free rate of return, which has got negligible or a zero amount of risk involved. So that is why basically return in government securities is considered as one of the best example of risk-free rate of return. Beta is the sensitivity index, right, which measures the movement of a share with respect to share market. If beta of a company is 2, it suggests that if the market index increases by 1%, then the return on market index increases by 1%, then the return on that particular security increases by 2%, right? If beta of a security is 2, right? You know the formula to calculate the value of beta. We have done those practicals also in detail. But if the beta of a security is 2, it signifies that कि अगर मार्केट इंडेक्स 1% से इंक्रीज कर रहा है, उसका रिटर्न 1% से इंक्रीज कर रहा है, तो उस पर्टिकुलर कंपनी का रिटर्न 2% से इंक्रीज करेगा, उस पर्टिकुलर कंपनी जिसका बीटा है 2, और वाइस वर्सा. If the return on market decreases by 1%, then the return on that particular security decreases by 2%. So beta basically shows, it indicates the movement of a share with respect to the market index. And those securities having beta greater than 1, they are termed as aggressive securities. They are more responsive to the movement of market. All those securities having beta less than 1 are termed as defensive securities. Those securities are a bit less responsive, in relation to the share market. So capital asset pricing model developed by William Sharpe. APD, arbitrage pricing theory model. APD model, right? APD model says that one cannot be, the return of a security cannot be based on one factor, while the return of a security can be based on around 3 or 4 factors. That is why this formula was developed, which says that return of a security is lambda 0 into lambda 1 beta 1, lambda 2 beta 2, lambda 3 beta 3, and lambda 4 beta 4. When lambda 0 is given, there is another formula also when lambda 0 is not given. So then we apply RF plus lambda 1 beta 1, lambda 2 beta 2, lambda 3 beta 3, lambda 4 beta 4, and Rm minus Rf. So this formula is applicable when lambda 0, this APD constant value is not given. So APD as well as SAPM, both these models are used to calculate the return, and SAPM and APD are equally important to suggest when to buy the share, when to hold the share, and when to sell the share. They are also used to suggest whether the share is overpriced or underpriced or fairly priced. And SAPM is even more important to find out the value of the share, and we have done tremendous practicals on SAPM as well as APT to calculate the return of the security as well as return of the portfolio. Then CML, capital market line, is a model which is used exclusively to calculate the return of the portfolio. Remember, these models are, SAPM is used to calculate the return of security as well as the return of portfolio, but CML is exclusively used to calculate the return of the portfolio. And there is this difference in CML model. The return of a portfolio is RF plus standard deviation of portfolio upon standard deviation of market into RM minus RF, which is the market risk premium. The difference between RM, return on market, and risk-free rate is the market risk premium. So you must take care of these formulae also, and this is exclusively used to calculate the return of portfolio. And we have also done many practicals on CML, so we are not discussing the practical aspect, but the major concepts, the major theoretical concepts of SAPM, which you should always take into care while studying these models. Sharpe index model, right? Sharpe index model, also called as single index model, where the return is calculated by return of a security, alpha of security, beta of security, and return of market. So that is return of a security, simultaneously return of a portfolio is alpha of portfolio, beta of portfolio into Rn. The alpha, it's the non-market component of the security, and beta can be calculated with the help of regression analysis, and their values can be placed over here to calculate the return of security, as well as if you want to calculate the return of portfolio, so instead of security you can place the value of the portfolio. So Sharpe index model was based on the proposition that when the market increases, right, the prices of the shares, they also increases, majority. The magnitude might be different, some might increase to a greater extent, other might increase to a lower extent, but when the share market increases, the index rises, the prices of the shares also increases, and vice versa. If the market crashes down, the prices as well as the return of the securities also crashes down. Again, the magnitude can be different. कोई ज़्यादा तेज बढ़ सकता है, कोई थोड़ा सा कम डिग्री के अंदर इंक्रीज करेगा, but it was based on the concept of market. So Sharpe index model, and equally important was Markowitz. Now Markowitz says that when an investor is investing, right, when an investor is investing his funds in various securities, जब कोई इन्वेस्टर अपने फंड्स को सिक्योरिटीज में इन्वेस्ट कर रहा है, the effect of one security purchased, right, the effect of one security purchased over the effects of another securities, effect of another securities is taken into consideration. कि जब आप एक सिक्योरिटी परचेज कर रहे हैं, साथ साथ उसके effects क्या हो सकते हैं दूसरी सिक्योरिटीज के ऊपर, they are also taken into consideration, and the results are analyzed with the help of several variables like return, risk, covariance, and coefficient of correlation. So remember, when an investor is investing his funds in various securities, the effects of one security purchased over the effects of another securities in the portfolio is taken into consideration, and the results are examined with the help of factors like return, risk, and the coefficient of correlation. ये जो effects हैं Markowitz theory के अंदर, these effects are analyzed with the help of factors like return, risk, coefficient of correlation or covariance. right? If the coefficient of correlation is positive, it indicates that the returns of both securities, increases together, rises upwards together, or if the returns are decreasing, so the return of both the securities are decreasing together. When the coefficient of correlation is positive, अगर coefficient of correlation positive है तो दोनों securities के returns बढ़ेंगे भी और decrease, अगर एक के decrease कर रहे हैं तो दूसरे के भी decrease करेंगे. If the coefficient of correlation is zero, then the returns of both securities are independent of each other. उनका कोई एक दूसरे से कोई effect नहीं होगा. And when the coefficient of correlation is negative, अगर coefficient of correlation या covariance negative है, इसका मतलब है जो दोनों securities के returns हैं, they will be inversely proportional to each other. Inversely proportional का मतलब है कि अगर एक के रिटर्न इंक्रीज करेंगे तो दूसरे के रिटर्न डिक्रीज करेंगे, या फिर दूसरी वाली के अगर रिटर्न इंक्रीज कर रहे हैं तो पहली वाली के रिटर्न डिक्रीज करेंगे. तो अगर कोफिशिएंट ऑफ कोरिलेशन या कोवेरियंस माइनस में आ रहा है तो दोनों सिक्योरिटीज के रिटर्न्स बिल्कुल इनवर्सली प्रोपोर्शनल होंगे कि एक के अगर इंक्रीज कर रहे हैं तो दूसरे के रिटर्न डिक्रीज करेंगे. That is why this is very important as far as theoretical aspect is concerned, Markowitz model, and he propounded this theory that the best combination of securities that one should take in the portfolio is those securities which have got negative correlation or negative covariance. कम से कम एक security के अगर रिटर्न डिक्रीज हो रहे हैं तो दूसरे से आप रिटर्न जो अमाउंट ऑफ मनी है, you can get a decent return by investing a proper amount of money. But if you are having a negative correlation between the two securities, कि अगर एक के रिटर्न डिक्रीज हो भी रहे हैं तो दूसरे के रिटर्न इंक्रीज होते हुए मिलेंगे आपको. तो SAPM, CML, APT, Sharp, Markowitz, although we have done tremendous practicals in all these models, SAPM, CML, APT, Sharp और Markowitz के जो concepts हैं वो basically analyze किए जाते हैं रिटर्न के ऊपर, risk of the portfolio. You have done formula involving risk of portfolio comprising of two securities and the coefficient of correlation or covariance. So starting from the concept of savings and investment, SEBI, RBI, DCA, IPC, BFS, theory and practicals on risk and return. Again, their theories are very, very important, and so are the practicals on all these models. Next, you can also go through various short notes. Now the short notes could be on NSE, National Stock Exchange, और उसका index Nifty, which is made up of 50 top companies of NSE, तो National Stock Exchange, Bombay Stock Exchange, right? और उसका market index है Sensex, which is comprising of top 30 companies of BSE of the market. तो National Stock Exchange, Bombay Stock Exchange, NSE, BSE, which was established in 1875. One of the oldest stock markets that we have. So NSE, BSE, उसके बाद आप लोग इसके अंदर बीटा के ऊपर भी थोड़ा सा पढ़ के जाइएगा. ऑल्दो बीटा को हमने बहुत डिटेल के अंदर किया हुआ है प्रैक्टिकल पोर्शन में भी. तो बीटा का शॉर्ट नोट एज वेल एज थ्योरी प्लस प्रैक्टिकल इज आल्सो इम्पोर्टेंट. ऑल द फॉर्मूलेज इन्वॉल्विंग कोवेरियंस अपॉन वेरियंस ऑफ मार्केट रिटर्न्स. तो सिमिलरली बीटा आप लोगों ने निकाला था कोफिशिएंट ऑफ कोरिलेशन x और y के बीच में, स्टैंडर्ड डेविएशन ऑफ x, स्टैंडर्ड डेविएशन ऑफ मार्केट. सो बीटा इज कैलकुलेटेड बाय दिस फॉर्मूला. बीटा इज आल्सो कैलकुलेटेड बाय कोवेरियंस between the security returns and market returns and variance of market returns. So और बीटा आपने जब वेट्स गिवन होते हैं तब भी निकालना सीखा था. वेट ऑफ ईच सिक्योरिटी मल्टीप्लाइड बाय बीटा ऑफ ईच सिक्योरिटी, thereby giving you the beta of portfolio. तो बीटा का theory as well as practical, that's important. Then you have rolling settlement also go through the short notes on rolling settlement, और उसी के साथ ही when you study rolling and settlement, उससे पहले आप trading and settlement procedure वो भी अच्छे से देख लीजिएगा। वो सारे steps which have been explained to you in the previous lecture, डीमैट अकाउंट ओपन करने से लेकर पूरा सेटलमेंट प्रोसीजर व्हेन यू पे ऑफ योर ड्यूज। तो ट्रेडिंग एंड सेटलमेंट प्रोसीजर ऑफ सिक्योरिटीज इज इक्वली इंपॉर्टेंट। एंड देन व्हेन यू स्टडी दिस फंडामेंटल एनालिसिस एंड टेक्निकल एनालिसिस, तो फंडामेंटल एनालिसिस एंड टेक्निकल एनालिसिस के साथ साथ आप एक छोटी सी डाउ थ्योरी, इसको भी शॉर्ट नोट्स के साथ ही पढ़ लीजिएगा। डाउ थ्योरी विच वाज प्रोपाउंडेड बाय चार्ल्स डाउ, राइट, हु सेड दैट मार्केट डिस्काउंट्स एवरीथिंग, मार्केट डिस्काउंट्स और एवरेजेस एवरीथिंग। और उन्होंने एक और बहुत इंपॉर्टेंट बात अपनी थ्योरी में कही थी, दैट इट इज नॉट द न्यूज which causes change in prices or which causes change in index. It is the action taken by traders, the action taken by traders on the basis of news which causes tremendous changes in the market. So the news itself is not a main aspect which is causing changes in the market, but it is the action taken by the traders on the basis of the news which causes immense changes in the market. तो केवल न्यूज मार्केट को नहीं मूव करती है, वो जो न्यूज आ रही है कोई भी न्यूज हो सकती है, whether there is a war between two countries or whether there is a political instability, तो उस न्यूज से ट्रेडर्स क्या स्टेप ले रहे हैं, कैसा रिएक्ट कर रहे हैं, वो रिएक्शन it causes changes in the prices of the shares or it causes changes in the market. So Dow theory propounded by Charles Dow is also very very important, जहाँ पर ये बताया गया था कि the market discounts everything, it averages nearly everything। साथ ही साथ जो भी important मार्केट की न्यूज़ है, वो न्यूज़ वो खुद मार्केट की प्राइसेस को नहीं अफेक्ट कर रही है, उस न्यूज से जो भी रिएक्शन हो रहा है, उस रिएक्शन से क्या क्या चेंजेस आ रहे हैं, वो सारा इस थ्योरी के अंदर एस्टैब्लिश किया गया था। सो फंडामेंटल एनालिसिस, टेक्निकल एनालिसिस के बाद में ये शॉर्ट डाउ थ्योरी भी आप लोग प्रिपेयर कर लीजिएगा। और फंडामेंटल और टेक्निकल एनालिसिस के डिफरेंसेस भी ध्यान रखने हैं कि फंडामेंटल एनालिसिस इज बेसिकली बेस्ड ऑन various factors or financial factors pertaining to the business, economy or company, while these technical analysis factors these are based on the statistics which are derived on the basis of market volumes or trade volumes which is happening in the market। तो fundamental analysis और technical analysis, इनके अंदर एक्सटेंसिवली टेक्निकल एनालिसिस के अंदर आप लोग स्टैटिस्टिकल चार्ट्स का यूज करते हैं, लैग इंडिकेटर्स, लीड इंडिकेटर्स का यूज किया जाता है, कॉज एंड इफेक्ट मेजर किया जाता है। फंडामेंटल एनालिसिस मेजर्स द कॉज व्हाइल टेक्निकल एनालिसिस स्टडीज द इफेक्ट। तो कॉज एंड इफेक्ट, इन फैक्टर्स को भी पढ़ के जाइएगा। और फंडामेंटल एनालिसिस और टेक्निकल एनालिसिस दे हैव आल्सो बीन एक्सप्लेन्ड इन डिटेल in the previous lecture। तो फंडामेंटल, टेक्निकल और इसके साथ साथ ही प्रैक्टिकल ऑन valuation of securities। Now in valuation of securities, the YTM on bonds and growth models in equity share valuation, all those single growth, double growth, multi growth models are important। तो YTM yield to maturity on bonds, जिसका भी आप लोगों को फॉर्मूला बताया गया था। YTM is calculated by this one, that is I plus F minus P upon N, 0.4 times of F plus 0.6 times of P into 100. So yield to maturity based on the interest aspect. I stands for interest. F stands for face value of the bond. P stands for current market price of the bond, and 0.4 and 0.6 are the constants. So YTM is very important. और simultaneously bond का intrinsic value कैसे निकाला जाता है on the basis of present value rates, उसको भी आप YTM के साथ ही एक बार स्टडी कीजिएगा. ग्रोथ मॉडल्स के अंदर सिंगल ग्रोथ मॉडल, डबल ग्रोथ, मल्टी ग्रोथ मॉडल्स आर इक्वली इंपॉर्टेंट. सो ऑल on the whole, these important aspects of SAPM should never be ignored, and while you start your preparation, you can start systematically. I mean, there are people who started randomly, but you should always start the preparation of SAPM in a very systematic approach. So these are my valuable suggestions for SAPM. So this is Dr. Himanshu Saxena, having done specialization in marketing and finance, signing off and leading the students to the path of glory and success.